welcome to the latest episode of Huang on Sweatin Money. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong, along with my co-host, Gibson.
Always great to be here.
Yeah. So let's take a look at what's in the news. So Communist China's yuan stabilized at 6.5795 domestically and 0.5% weaker overseas on the spot markets. Now, spot markets are commodities or securities markets in which goods are sold for cash and delivered immediately, according to Investopedia. Keep in mind, however, this is after the Chinese New Year's had injected some liquidity into the markets to stabilize things just in time for the Chinese New Year's coming up on February 8th. Oh, yeah, sorry, screwed up that delivery.
Just on the call, play it off. I don't think they would have noticed.
Meh. Anyways, China's markets will be closed for the Lunar New Year on Monday, February 8th, for a whole week before reopening.
Very, very important news, guys. Extremely important.
It is. Just for a note, Hong Kong's Hang Seng Index will also be closed for 3 days, as well as Korea's Kospi Index.
Write it down, boys. Very significant 3 days.
We'll get to why in a bit. Now, Huang WeiMin, a self-taught hedge fund manager, bet on the stock markets going down in China and made 6,200%. Says you should either short the markets or just don't bother putting money in it. His background of being a state-run enterprise backed by the government probably gives him some credibility to make bets against China's state-owned enterprises and its economy. So. Now, the reason why we're putting so much emphasis on this holiday, Chinese New Year's, is because people have done some studies, and it's been known to have an actual effect on the economy. And here's another report specifically on its effects in the stock market. You can check it out on the website. Now, this right here is a 4-year-old article, but it still applies today. Many American companies rely on Chinese manufacturing, but when the factory shut down, how do they get their orders in? Well, they have to rush them. The weeks leading up to the traditional holiday are very hectic, and all sorts of things happen. So why do they shut down for this long? When even in Hong Kong, Korea, and Taiwan, where the holiday is still celebrated, no one shuts down for the same amount of time. Any clues?
I don't know.
Well, let me tell you.
All right, you do that.
It's because of the heavy migrant worker population mixed with a combination of the restrictive policy of the hukou, or registrant system, which restricts the free movement of people. So basically, if you go from one city to another or into a different province, this registrant system, this hukou, acts as a sort of passport within your own country. Very popular amongst Soviet nations, really. So this is, although it's not as restrictive as it used to be, there's a lot of rules that still hold people back because the system still exists. But yeah, so it restricts the free movement of people, and its very purpose was to prevent what's been happening in China for the past 30 years, urbanization and the loss of farm workers. So what happens is these factories have to shut down and allow these people to go home, because this isn't just New Year's, it's more something akin to like New Year's, Christmas, and a bunch of fireworks all wrapped up into one thing. And you have too many people who might commit another cultural revolution if they can't go home for the traditional holidays. Of course, this just doesn't affect China and the US, but the rest of the world as well. And according to the Quantitative Systematic Market Analysis website, or KUSMA, they took a look at other Chinese holidays as well, and they all had an effect, but Chinese New Year's had the most dramatic effect of them all. I don't think that last part came in clearly, did it?
I think so.
Okay, good enough. So,
Now you're getting cut off.
yeah, hey,
You're back.
okay,
Welcome back.
great. No, I'm cut off again. Nope, now I'm back. Nope, cut off. All right. Make up your mind, Google. Um, an analyst at Goldman Sachs said that there will be so much crude oil that the reserve storage space we have is running out, which means that there's so much oil we'll have to park it offshores, and that will start to get expensive. While he says that there's too much supply for the oil, he doesn't recommend selling equities in oil. What's your take?
I think it's great news for people who drive cars. Bad news for the environment.
Pretty much.
Horrible news for the stock market, I imagine. I mean, I wonder why he says don't sell stuff in equity. If anything, I would say, hey, maybe it's time to sell. There's gonna be an oversupply problem. Whatever inventory you have that's worth like $100 a barrel right now, it's probably gonna be worth $20 by next week. Why wouldn't you want to sell? Why wouldn't you want to get rid of your inventory as quick as you can? Perhaps he just doesn't want the market to panic while he secretly sells it. I don't know.
Probably.
I mean, in the ultra long run, as the world supply of oil ultimately like diminishes completely, sure, it'd be fine. But at the same time, you don't want to make a bet that's too far off in the future because even Warren Buffett can't predict that far. He's like, you know what? After I die, I want all my wealth to be donated to charity within a very short period of time and have it all spent very quickly. Because just you can't predict that far in the future because there's so many like variables that could pop up and so many things can change between now and then that it's just not as safe of a call.
Um, I just think that he thinks that there are unknown, foreseeable things, and to him that the oil industry, I think, as he said in the video, if you get a chance to watch it, he says that it's one of the more easier sectors to guess. It's like either the prices go up or they go down, and it's pretty much just a supply and demand issue. So that's why he's saying that like he predicts that although supply will increase beyond demand, he um, he thinks that the markets will stabilize. In
Of
short,
course, well, markets always stabilizes. It's just the question is it stabilizing above the point that you bought in or below the point you bought in? If it's below, you lose money. If it's above, you make it. Now the question is, what's contributing to part of the decrease in demand? Because then the price, if the demand and supply remains exactly the same, price remains the same. Supply increases, then demand drops. But I think part of the reduction in demand is just that maybe perhaps we're undergoing a technological shift. Perhaps our concern with the environment is changing the ways that consumer behavior. I'm thinking maybe, and if there's nothing, let's say these are type of regulations that prevent people from actually consuming more oil products, then it's very possible that this lower demand is here to stay, which means this lower price might be here to stay, which means that, well, this lower demand might be here to stay, therefore lower consumption, therefore the amount of supply might be here to stay. And then the market hasn't fully processed like Iran's possible involvement with the oil market in the future either. So for me, I think there's a lot of volatility, and because of all this like possibilities of that, it's not how much you can make, it's also how much you can lose. And no one really invests. If the odds of you making money and losing money is roughly the same, you're kind of gambling. And no one's really in it for that. So because how it is in the market, I say get out and hold on to cash for now until there's like a clear direction of where the market's going. For example, let's say Iran gets in the market, the oil prices drop even more, and then the floors, then maybe it's a good time to buy. But right now, I don't know. It could go up, it could go down. Like the blizzard in the East Coast basically sent the oil prices back up a bit. But then what if the blizzard like basically ends and then bam, the prices drop again? And then what happens? like more.
Actually, no, that's a funny thing, because they didn't really rise all that much here. They're actually starting to fall down again. So maybe
Hmm.
that's the thing with what happened in Southern California, like when we were talking about a couple weeks back, where other places the gas prices had continued to fall, but then in Southern California they were actually on the rise all of a sudden. So maybe you're right. Maybe it's a weather thing. Uh,
There's definitely a news article that said the blizzards impacted the oil prices. I'm like, huh, very
no, but I
random.
mean, like yeah, it's for sure that like yeah, it happened. It's happening now on the East Coast, but no one really said anything for California. Is the thing.
That's true.
Yeah,
I mean, if you think about it, it makes sense because how does oil get from point A to point B? It needs to be transported. But
right.
when you have hazardous conditions, it's not as easy to transport things, and maybe some things happen in the process of getting things from point A to point B. That can contribute to a reduction in supply, although a temporary reduction in supply, they could still contribute to it. So that might have an impact on prices. Now, you say one company, not a big deal, but if you're talking about Blizzard across the entire region of the United States, that could have that impact to the market we've been seeing, or at least explain it.
So you don't think that? What about the person we introduced earlier, Huang WeiMin, who said either keep your money in cash or short the market right now?
I completely agree with his assessment. I mean, that kind of goes with a lot of what I've been saying. It's
Yeah,
just
but I
that
mean, I was just wondering more about the shorting the market. Like, do you think it's even stable enough to short the market at this point or anywhere else in the future, like foreseeable future, I should say?
I think part of investment, stock investment, is also psychology. Now, while there's a lot of numbers involved and whatnot, who's ultimately behind the market movement? People. To a certain extent, computer programs. To a certain extent, the people behind computer programs are still people. So ultimately, people. Now that we established that, um, you have to think as an investor, like would you invest? You know, like, and in this market, would you invest? And as an investor, why would you invest? You're investing for growth. You're investing because you think, hey, this $1 is going to be turned into like $5 or $10 tomorrow or someday in the future. But right now, that vision is getting more and more blurred. There's more and more concerns. There's more and more doubts. There's more and more obstacles that's getting in the way. You're running a race. Well, at the beginning, there was no obstacles, and suddenly, as you're running, there's more and more and more and more obstacles going in there. And then, the finish line is getting further and further away. So it's becoming more and more uncertain. At some point, you're like, fuck it, maybe I shouldn't even race altogether. For me, I'm thinking, you know what? There's something screwy going on. Why even be to participate in this race? It seems kind of rigged. And I think this is one of those moments where sometimes when you're shorting a stock, you're also thinking, I'm betting that the stock cannot continue to grow. And with a very, very strong company, you're very hesitant to make that bet because you're thinking, man, it has such vitality. It's like betting a wheat would not like flourish. Like you're thinking, you're taking a bet. You're basically betting a piece of fertile land would not grow grass. And you're thinking, damn, that land's so fertile, grass is bound to grow. But then you're starting, like, there's other factors now. Like, there's doubts to whether or not the land is fertile. There's doubts on, there's like an indication that it have been overly salted, or that there's like way too much water, or lack of water, desertification. All these other new news are coming out that makes you have a lot of doubt on it. Before you thought, hey, a growth play is perfectly to make. Now you're thinking, you know what, maybe it won't grow. But that effect, that thought process is a basically a market level thought process. Everyone's thinking maybe it won't grow, and that doubt is what's going to cause the market to start shrinking and collapsing. Now the other question is, well, what props the market up? Well, I think a lot of it is basically on China. China is going to be driving the growth, a lot of the growth and a lot of consumption, and that's the expectation of the entire world. Greece is not doing too hot. United States is okay-ish, and China is supposedly be on like poised to spend a lot more money and it reinvest all its extra capital because we're saying, hey, China, you know what? No more cheap labor. You cannot be like the manufacturing point of the world anymore. You can't do currency manipulation. But what does it translate into? It translates into, hey, China, instead of selling us goods, you have to buy goods from us now. It literally translates into that because basically it doesn't make as much sense for them to produce products in China anymore because it just costs relatively less now because the currency has more buying power. And as we have that currency, as we as the currency talk goes on away, and eventually if China's currency becomes like market regulated or free, like basically how just fluctuates with the market and demand, then China's buying power will keep going up, and then they'll start consuming things. Now the question is, there's a lot of concerns regarding China's slower growth because like our economic problems. And this comes to it kind of stems from how China used to be a labor economy. And as the economy matures, just like the United States, we used to be a labor economy as well. But we kind of pivoted from labor economy to a service economy. And China is undergoing the same pivot. They're going from a labor economy, and then
That's
eventually, if they
debatable, though. That is very much debatable because to go from a labor-based economy to a service-based economy, you have to have a lot of intellect, right? You have to have the people that are there. And yeah, don't get me wrong, there are a lot of smart people, but then of course, the other thing is also like their idea of innovation is not necessarily conducive to protecting patents properly, or so that's what some people believe.
well, it's kind of the understanding is very simple. It's like with free trade and basically a globalized economy or market that we have now, is that like China, due to the changes in currency and improvement, economic improvement, and just like its prosperity, it's kind of shooting itself in the foot in a way because now the people who are working in factories have more options, and like they have more buying power. They're no longer content with slaving away in a factory all their life, and that causes the worker wages go up. And as the competition for factory employees goes up, then the cost of these employees goes up. And then eventually this decision for basically and when we're talking about decisions, we're always looking at the borderline people. Like they're on the fence of staying in China or moving away from China. They might go, hey, you know what? It might be cheaper to outsource all the work to another country, perhaps maybe India, or Vietnam or whatever other places. They're like, hey, maybe it makes more sense now. And because of that, it shifts the jobs of like the factory jobs away from China. Now the question is that people still have to make a living. So instead of labor, like instead of working in a factory or whatnot, what else can they do? And in a way, that's the problem that they're having is that if they shift away these jobs, a lot of people who are trained to do these jobs might no longer have jobs, and they might basically derail um, their the economy. So that's one of the growing pains that they have as they shift away from, and can be currency induced. Like if they kept their currency artificial low, this can have this effect. So as they shift back to regular currency, then this could have an effect where they have to balance out, like have a balance between labor and non and service based service based products, as opposed to purely like labor based products that or majority labor based products. So I think like a lot of the world is thinking, hey, you know what? Like, and a lot of the capital is, in China right now. There's a lot of trade deficits going on in China. China has consistently exported more than they imported, and there's a point in time the entire world is kind of looking for China to reverse that trend so that they start buying stuff. And why is that important? Because when China starts buying stuff, everyone else has to produce more, and if everyone else has to produce more, their GDP goes up. China's GDP goes down because they're importing more now. So but then there's the other question now that's the entire world is like looking toward that, saying, hey, you know what? As China starts like buying stuff, our GDP is going to grow massively. But China's like, hey, you know what? We might not be doing so hot. We might not be able to import just yet. And then the world's like, wait, what's going on? And then, and this giant pause period, this assessment going like, what's happening, is what's causing all this doubt and causes shrinking. It's like, wait. If China can't buy, then what's going to happen? Everyone's like, hey, you know what? We're hoping that, with like China like growing up the way it is, they're gonna start buying stuff. And China's like, oh, you know what? We're not buying anything. And then the rest of the world's like, hey, well, how are we gonna do business if you're not gonna buy stuff? And that pause is what's causing a lot of the concern. Like a lot of growth, a lot of stock investment is based on future growth. They're thinking, hey, you know what? In the future, the price will go up, and that's because people keep buying stuff. The demand goes up, so the prices go up. But what if the demand doesn't go up? Well, then what's the point of holding on to the stock if it's not going to grow? And then there's other factor, the oil. And I
The
feel
issue of
like
like supply and demand with China, whether or not the Chinese people will actually buy our stuff. I don't think they will. No, if you're
because
talking about like American cars or like things that are perceived to have like some sort of luxury status of some sort, yeah, they're gonna buy that. But as far as helping out the economy at large, look at what's happened to Hong Kong. all you have is nothing but congested streets, people crowding around. It hasn't really helped Hong Kong's economy all that much. In fact, it's actually made it worse. Rents have risen up dramatically. Um, a lot of commodities, everyday commodities, have been driven up as well. Uh, I mean, it hasn't helped out Hong Kong at all as far as like having the Chinese come and buy things for them. So I
Well, it
don't think it's
depends.
necessarily a good
If
thing
you
in
own
that
a
aspect. But
property,
also, you also forget that. If you were here for the last episode, I did mention an article where a group of people actually said that the road to China becoming a service-based economy. The other thing, aside from intellectual property rights, is a robust legal system to actually protect rights and trademark and copyright property, and they don't have something like that. They don't have a robust legal system right now. As I mentioned in the last episode, they currently have a system where it's not rule of law, it's rule by law. And I think you got cut off.
no, I just don't know what to say in response to rule. I personally don't know the
Okay.
difference. So what's the difference between a rule of law and rule by law?
Okay, so to put it in Cantonese, it's rule of law is um, oh shoot is 法治社会, like to have a rule of law society, a society which is ruled with laws. But then
Hmm.
rule by law is 人治社会, so it's people who control those laws. It's at the beckon of the individual.
I see. All right,
So
I understand.
yeah, so in other words, like it's not an actual, like while you do have laws, it's not in the spirit of law in the I think I got cut off.
I believe you did.
Okay. So it's not it's not great. Now I'm just cutting myself off with my editorial
Huh,
voice in my head.
huh. Well,
Uh,
I think well, I think I understand what you're saying. Is that ultimately it's the laws are not like the rules of the games keep changing, and
Pretty
it's not
much,
exactly
yeah.
a fair ground for people to play. It's not fair state to get play. I think so. And because of this, and because of all these concerns, I feel like it's not very safe. And like there is no, so let's say clear buys. Like if you recall clear buys back in the economic like of a financial crisis, is that when everything bottomed, when the banks were being rescued, it was a clear buy. Why is it a clear buy? Because the banks were being rescued. They was basically saying that these banks can't fail. There's nowhere to go but up for these stocks, and it's a very clear buy. Another clear buy might be the oil, like in the future. Like when it bottoms, then it's a clear buy. But right now, I don't think there's a clear buy. If anything, and then the question is like everyone start always thinking in buy terms. Like oh, buy this, it'll go up, buy this, it'll go that. But then at what point does it go down? What are the signals for you to sell? And I feel like right now there's just so many signals that you know what, a lack of certainty for one might be a signal to sell. Another thing, like for example, like the housing crisis. Um, like there's a lot of signals to indicate that hey, maybe it's time to sell. Like if these banks were having issues like Lehman Brothers and whatnot, perhaps you should have just shorted it right off the bat or just not be involved in the market. Now, people are always thinking like, oh, I should need to have the money in the market and whatnot, and then oh, I'm missing out on opportunities. But think about it this way: if you hold on to cash and the entire market falls by 10, 20%, you have effectively made 10 to 20%. Of course, if you were in an even more advantaged position and you short the market and the entire market goes down 10 to 20%, you gain 10 to 20%, and also in addition to the money you didn't lose, which is another 10 to 20%. And I think, in this economy, in this the state of things, there's no reason why not to just hold on to cash, unless you can clearly see a stock that will sink. Um, yeah, like I think there's a lot of things that are tied to China right now. I think bank stocks might be a clear sinker. Um, and then the Dow might be impacted on a massive scale due to oil. Um, or even China. There's a lot of factors. Of course, then there's another effect. like how fragile the Chinese economy is. Well, think about how Greece is and how fragile the Eurozone is. What would the negative news from China if our entire world is so interconnected, and then China is having issues and it's bringing everything down? Perhaps it can derail a lot of economic movements to bring the economy back up in places like Greece or in the Eurozone. It could trigger that. And then there's a lot of concern here because all these uncertainties, you're like, you know what, there's no clear vision. You're jumping into a maze and there's no clear path out. So you're like, you know what, maybe I should back out the maze. Maybe I shouldn't participate. Maybe I should wait until I have a better sense of things. Maybe
Well,
like
we'll
I should
talk
wait
about
till
that
my vision's better.
uncertainty in a bit. I think we should probably move on to the next couple of things because it's kind of gonna it's gonna cover some of the stuff we just mentioned.
All right, sounds great.
I like this guy. Bloomberg brought in another Goldman Sachs analyst to talk about how the pullback in stocks isn't a signal for a recession. In short, he says that stock performance does not necessarily equate to economic performance. Oh,
That is very
okay.
true.
Let me repeat that. Stock performance does not equate to economic performance.
That's very true.
Yeah. So I mean, it's a good.
I think you faded out again.
Yeah.
So stock performance is not exactly equated to economic performance, and that's very true. And the reason why I believe that is just because stocks are kind of a way for corporations to borrow money. Is instead of borrowing it from the banks, which was very tough, they basically borrow directly from people. So it's now harder to borrow money, but does that mean that these corporations are going to go under? No, not really. You know, it doesn't literally equate to recession or equate to downward things. It's just a factor that might have an effect, may not have an effect.
Yeah, his whole point of the interview was that as far as fears of a recession, it's merely a fear. So
That's true. I mean, there's other factors that oftentimes economists can't will have a hard time predicting what will happen. It's only until after we experience periods of stagnant growth, lack of growth, or decreasing growth that can we tell you that we're actually in a recession. It's kind of ex post factos
yeah,
after the
well,
fact.
uh, kind of moving along to our next topic, the people, basically rich people, every year they come to this event, and it happened again just last week, a couple days ago. The World Economic Forum in Davos, Switzerland. So like what you're talking about, a bunch of rich people are trying to talk about, what's happening with the economy, trying to predict what's going to happen to the economy. These are people like, well, not just rich people in general, but also a lot of investors and, fund managers, these
Hmm.
these sorts. Um, yeah. Um, Now, this specific article is talking about how they tracked down the rich people and what sort of helicopters they flew in. Sorry, and what flights they took. But yeah, like you were saying, as far as figuring out what the market's going to do, no one knows.
Actually, there is a person. There's a group of people that would know. I would say these are the institutional holders. But even then, when the market changes, the institutional holders do have a massive impact on the market. But sometimes the institutional holders cannot do anything about anything. For example, Buffett. He has such a large share of such a huge landscape of the economy and so many companies that he literally can't sell anything. If he sells something, he might signal to the market that everyone should panic, and then the rest of investments is screwed. So it's a very interesting thing because they are in the position to influence the prices up or downwards. For example, Buffett, when he buys the stocks, everyone starts rushing to buy that stock because like, oh, maybe Buffett's a super rich guy, knows exactly what's going on. When he sells the stock, everyone sells the stock. Hey, you know what? Maybe he has insider scoop. They are in the position to influence it. But the question is it in their best interest to do so? I don't know. We are but mortals, and they are like gods.
Well, here's the thing. A lot of the institutional managers that are, institutional funds that you're talking about, the people that manage those funds, they're all at this forum, and they all have different views. This being one of them. So you can go.
You fade out again.
Yeah, am I back?
You're back.
Hello? Okay. So you can go to Bloomberg's website and catch a series of interviews of everyone that was at Davos. But one that is catching traction right now is the fact that George Soros, a billionaire investor, says that China is in for a hard landing, and the reported 6.8% economic growth rate is more like 3.5%, and thinks China's problems will bleed over into the rest of the world. He says he's been betting against S&P 500 and expects a crash similar to 2008, and says it was a mistake for the Feds to raise rates. Now, other analysts had also said that the supposed bleed over from China's economy may not affect the rest of the world. So,
I think, what's surprising is that if you ever go to China or Hong Kong or anywhere in the world, the price of a burger from McDonald's is roughly the same. In fact, the price of everything is roughly the same. It's kind of alludes to how interconnected the world is now, thanks to the internet and all these, air flights and whatnot. Yeah, you could basically translate the price using the USD. It's roughly exactly the same, which is kind of surprising and very interesting. You would think that would be a lot cheaper, but it isn't. So, I mean, I think, the thing is like, oh, would the United States problems in the United States impact the rest of the world? Yeah. Would the issues in Europe impact the rest of the world? Yeah, it did. So why wouldn't the issues in China impact the rest of the world? I mean, it kind of makes a lot of sense. If you were to, um, yeah, I mean, think about it. Like China makes so much of the world's products. How can it not impact the world? That's a question I have.
hard to say. I mean, first of all, if you're talking about the Big Mac index, actually the prices will matter. There are some people in certain countries that cannot afford a basic Big Mac. It's still, McDonald's is still somewhat of a status symbol in certain areas. But back to whether or not China's issues are going to bleed over into other markets, it actually, I don't think it will. Because okay, so what if China's economy does tank? I think I cut off again, so let me repeat that. What if China's economy actually does tank?
Well, there's positive and negative to every single situation. If this economy does tank, that means the labor will become cheap, and the cost to our companies would go down, which can be a positive. The downside is if China's economy does tank, maybe there won't be as much Chinese investment in our market, and that could basically depress stock values. So that's a negative.
No, the Chinese do not have that much money to invest in a major sector of our economy. That's exactly why they're investing so much into places like Africa, because it's a good investment for them. Now, why aren't we investing in Africa? The difference is that China, not being a place with a rule of law, they're used to working in places that don't have a lot of rule of law. So for us, we look at Africa as a very risky business. China, they see it as like everyday things. So, um, can
Well,
we do
let's
without
say,
China's investment dollars? I think we can.
well, what about their consumption dollars? I mean,
Well,
ultimately, the United States for its GDP, we have to export for the GDP go up. It's a factor of consumer spending and exports.
okay,
So,
so put some puts on car stocks. Um, Maybe put some puts on some of the commodity stocks that have exposure to China. But other than that, I really wouldn't worry about it.
I don't know. I think there's, it's also like the soothsayers. I think what's interesting is that the sheer amount of people that are coming out and saying don't buy, don't buy, right? I think
Yeah.
that number has definitely gone up. I think and I feel like there has to be a reason for it. And not only that, but it expresses a sentiment. And then let's say that these people are representative of like the market sentiment. That would indicate that people are going to start selling stuff. If we would look at these soothsayers as like people's sentiments, everyone's like, oh, buy, 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 it's a great time to buy it, then perhaps it is a great time to buy. And then a lot of people start buying because of that. But then what if people say sell, 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 don't buy? Then it might be an indication that, hey, perhaps you shouldn't be in the market and sell it. I just don't think that a lot of these commentaries can be easily discounted. I mean, I feel like there's a valid reason. For example, like they're expecting maybe we're supposed to sell a lot more products internationally, and China is probably the biggest market in the world. And if they don't buy anything, then who the hell do we sell things to? If you simplify, if you simplify the economy and think about like instead of all the products the United States spot sells, like from things from like Intel to like exporting of
But you're
oil to
also forgetting that China has so much red tape. It is so ridiculous for anyone to buy anything that people, for the longest time, until they started protesting in Hong Kong, they would much rather go down to Hong Kong and buy things there. That's why whenever they start coming over to the U.S., the ones that actually have money now to come to the U.S. or Japan for like a couple of days to visit or whatever, they're always stocking up on things left and right because it's cheaper to actually buy it here in America than it is to buy it in China. There's so much freaking red tape over there.
well,
So as far as our stuff getting into China, I mean, right now it's not even possible. I mean, okay, it's a gross exaggeration. I'm not saying it's not possible, but it's not as cheap as you think it is, and it's not as available to most people as you think it is. People over there, they're still buying domestic products because they have no choice. Now, given the choice, if they do have more money, yeah, okay, yes, they would buy American products.
well,
But for the most
it's
part,
it's just a
people,
question, with China having the surpluses it has, which means that there's a lot more money, perhaps not per capita, but in total, is sitting in China. The question is, well, when is it going to come back? It's kind of like you have to pass the buck, and then when are they going to pass it back? And essentially, is that they might not pass it back, and that might be a concern for us. And part of it might be that, hey, you know what, the economic performance of a country depends on its export, and we have reason to believe that perhaps, and a lot of market fluctuations and the upward movement is triggered by the expectation of growth. I mean, the mere idea that we might not be growing as much would already trigger the market to move in a downward movement and correct itself to this new information, just like new realization that perhaps it's not going to grow enough. Then you have to also contemplate what triggers growth. Like, why does the economy keep growing? I personally believe that maybe as a factor of human growth. And as we um, consume more and more of the finite resources of our planet, maybe our growth will level off. At that point, how are we going to create new jobs while taking from some other job? There's a lot of questions involved in it. I just think that right now we're definitely undergoing a period of uncertainty, and that I think that during periods of certainty, it's easier to buy, and during periods of uncertainty, then it's better to not be involved in the market, or well, not to be buying, not at least not in a call position. I
yeah,
think perhaps it's a good opportunity to look for things that you always want to acquire. It's a good opportunity to look for sales, but I don't think it's a good opportunity to say, hey, you know what, I'm going to buy this stock, it's going to go up, because I don't see a real reason why. Like a counterpoint is there a reason why the stock will go up? Like, why would the stock go up? I don't know. I don't see a strong reason for it. I don't expect anything to grow. Every single sector is reporting losses across the board. Everyone's complaining about revenue problems. So why would it grow up? Like, I don't know. And because the lack of information for growth, the lack of support for the argument, the growth side of the argument, kind of helps me think that, hey, you know what? Maybe I shouldn't be in the call position on the market right now. Maybe a short position is the way to play it. Perhaps, and people who tell you to take your money out of the market are essentially saying, the market either A, the market is very volatile, or B, it might go down. And if the market goes down and you hold on to your cash, then you basically made money by not losing money. and then you have a higher buying power. There's a lot of wins. And then there's no need to take the risk right now, and then there's no clear growth signs. It's kind of the market's kind of entering a bearish state, so maybe it wouldn't hurt. And I mean, this expert is saying that, hey, you know what, he's expect a hard landing of the Chinese economy, and I could see, possibly why he would believe that. And if he's credible, then maybe it is a good time to not be involved in the market right now.
All right, well, let's look at the week in review then. So last week, just a reminder that Monday was closed due to Martin Luther King Jr. holiday, and then before that, things they were kind of falling, and then they when the markets reopened. Geez.
I think you faded out again.
Yeah, I did, and I'm doing it again. Okay.
You're back.
So they fell a bit on Tuesday when they reopened back up, and then they fell some more on Wednesday, and then midday they kind of came back up, and it was still at a loss when it finished, but it was at least coming back up. And started thinking,
You can figure it out again.
so people started thinking that the worst was over. The good times are going to start rolling in, and things started coming back up all the way up until Friday. We actually finished on top on Friday. So let's look at today's performance. Sadly, the Dow Jones dropped 208 points, the S&P fell 30 points, and the Nasdaq was down 72 points. And this was despite the fact that the Shanghai Stock Exchange, Hong Kong's Hang Seng Index, and Taiwan Stock Exchange all rising up on Monday thanks to the lower prices of oil, providing those areas with cheap energy. Japan's Nikkei Index even showed a mild 0.9% increase, while Korea's Kospi Index only showed a 0.74 increase, but an increase nonetheless. Despite this, though, the rise in Asian stocks obviously didn't impress America, and it didn't impress Europe either. So I don't know what's up with Asia.
Well, I think Asia's economy reacting. Hey, you know what? The worst is over. It's not that bad. But this shock, I think this downward drop has caused a lot of investors to be more hesitant about entering the market. Like there could be a group of investors that want to enter the market when it's a sure win, and now the basically the path has become more and more, the vision become more and more cloudy. Like, you know what? I don't know if it's gonna be a sure win anymore. Why would something so certain like fall? I thought it was for sure that we're going to keep growing.
So what are
And
Asian investors seeing in this, aside from the oil prices? Because I mean, like we said earlier, they're going to continue to fall. So
I don't know. I mean, maybe somehow it's being propped up. Maybe they actually do think that is the worst is over on their end. But for us, perhaps what's happening is that we're kind of just pulling back, and then we're just watching and just waiting for a
oh no,
moment
no, I
to
mean
come.
I know what we're doing right here. I mean
Yeah.
here in Europe, yeah, it's a lot more worrying. But then
Mhm.
I was just kind of curious as to how the Asian markets are all up. I mean, I guess we have to see how they're performing, in a couple hours when they
Open
open
again.
again. But we'll see.
Yeah, I don't know. I think perhaps it's just temporary, perhaps. And there's effects in the on the stock markets. For example, Friday's upward movement can be an effect of people who have been shorting like the whole week long, and now they have to cover their short position, so they have to buy the stock back. But then they could still be basically, you know, a a part of the shorting cult.
Yeah,
With China, I think part of it is like a conspiracy theory that I and my father might share, is that big major players, if the market doesn't move, they can't make money. It's like they have to make the market volatile, so there has to be shorting and buying and selling to, make the market move, aka market makers. Who
yeah.
knows? I personally don't understand, but perhaps a lot of the negative sentiment was centered around oil, and now they're thinking, you know what, oil is not that big of a concern. Maybe we overreacted. Let's time to buy back. and then by tomorrow maybe like, hey, you know what? It is true. You know, the low oil prices are here to stay, and those who are invested in oil, I actually I don't understand. You know, because then I would think that like lower oil prices will be cheaper costs, which is ultimately good for everyone, right? But maybe it's not. Like maybe somehow they might be institutionally invested in oil where like they just bought so much of the oil inventory because they thought that it will always go up, kind of like wine, you know? So they're like, you know what? Yeah, we didn't expect it, so I don't know.
Well, I think for us, even if the oil prices go down, I mean, yeah, it's good for the regular, average, everyday consumer. But as far as what it does to the American oil producers, that definitely sucks, and that does take a toll on the economy. But anyways, yeah, let's.
Well, I mean, it does a toll on the stock market. Whether or not it has an effect on the economy, that's another question. It's a deeper question.
Yeah. All right. Well, let's look at the portfolio review. And when I say portfolio review, of course, I mean my portfolio.
Uh,
Mondelez, the makers of all of our favorite snacks, like Oreos and Chips Ahoy. They got into some trouble. California's Safe Drinking Water and Toxic Enforcement Act of 1986 requires that whenever people are exposed to dangerous amounts of a toxic element, they must have a Proposition 65 warning, in this case, lead. Both those cookies on the screen aren't the ones you should be worried about.
oh, that's
It
good.
was these ginger snaps.
Good thing I don't like ginger snaps.
Yeah. Well, they were shown to have 9 times the tolerance level allowed without having to show that warning. Mondelez responded by saying that they've already changed their formulas. Hello?
Yeah,
Okay.
I don't know what
Sorry
to
about
say to
that.
that.
So
Like,
Mondelez responded by saying that they already changed their formulas.
that was in the past. That was a whole 5 minutes ago, Kong. Five
Yeah.
minutes ago. We're a whole different company now. We don't do that stuff anymore.
Well, yeah. Apparently.
Well, I don't
Um,
know. At least we caught it. I mean, in other countries, maybe we, or even other states, maybe may not be
yeah, other
enforced.
countries like China.
Yeah, I mean, even your
but
eggs, you can't be sure that it's not a it's
but no,
the
no, no. It's actually it's funny because they're like, yeah, we already changed our formulas, and plus, it wasn't really anything in our factory for the most part, except for the two main ingredients, right? They said that it was because of the ginger and molasses, right? They said that is where they sourced it from that was the problem. But I mean, I think they're actually trying to, say something against the natural foods movement because, if you look at their box, it says that it's made with real ginger and molasses, real, as opposed to that fake stuff that they might try to pawn off on you with their other products.
it makes me wonder, what the hell? What? That's like cookies made with real stuff. I'm like, as opposed to what? Like fake ginger, fake molasses?
Yeah,
Like
exactly.
artificial flavors of ginger? I mean, why would you even bother? It just seems much easier to just have real ginger and real molasses with real sugar. Well, I guess with artificial sweeteners, but that's a different story. I mean, yeah, I don't know.
Yeah, I don't know
Sugar from
either.
sugar cane. I'm like, yeah, where else does sugar come from? I don't know.
Well,
I
as
always
long
thought
as,
sugar cane.
they don't find anything with the Oreos and Chips Ahoy's, I'm good.
I know I've consumed so many Chips Ahoy and Oreo cookies in my lifetime that you know what yeah, my insides might just be lined with lead by now. I am
Well,
not gonna do well in X-ray scanners.
yeah.
Superman can't see shit inside of me.
Well, let's see what Superman can look at our investing strategies.
Help us, Superman, aka Batman.
Here's an investing strategy for some people, especially those on the West Coast who have to wake up early at 6:30 a.m. To get into the market. Well, this article says don't. According to the Wall Street Journal, because there's so much trading going on at the early hours, a lot of prices actually are higher than they would be by the end of the trading day, which means you might be overbuying things in a rush. A lot of these orders are also trying to fulfill the prior business day's orders that didn't get through and after hour orders as well. So rather than waking up real early, you should save yourself some sleep, and then you want to sell in the morning to take advantage of possibly higher prices, and automate that, of course. Now, the price gap between sorry, the price gap between sellers asking prices and at the beginning of the day versus the end of the day can be as much as 0.802 percentage points. And while that may not sound like a whole lot, if you're a big trader, that'll actually start to add up.
Oh yeah. Like for example, 84% might not sound like a big deal, like 84 cents. But what if you have 1,000 stocks? Then that number is way more significant. Or 10,000. You're like, whoa, what the heck? It's no longer 84 cents anymore. It's like $840. That's practically a grand.
Yeah.
Yeah, I mean, to each their own. I mean, perhaps, you can seek the recommendation as, oh, don't buy the stocks in the morning, but perhaps it might be a recommendation to short the stocks in the morning.
Well, yeah, I think that's the article. Oh, geez, I got cut off again. So the article only covered buying stock. Of course, it didn't go into the issue of selling all that much. Aside from saying if you wanted to sell high, yes, sell it the morning. But then if you're talking about options, that's a whole nother ball game, of course. So
Yeah, for sure.
all right, so let's go to recommendations. My recommendation is an app called
Solo to learn Python.
wait for it. Yes, thank you. Learn Python by a group called SoloLearn. Now they take the language.
I think you faded out.
Yeah, so they
Why is the
take.
Python logo a bird?
Okay, so that's the Duolingo logo.
Yeah. Learn
Jeez.
Python. Eat the bird.
Hello? All right. I think I'm back. So
Reminds me
the
of that,
bird
owl
is the
thing.
logo for another software called Duolingo, which helps.
And you're out again. The bird reminds me of a mascot for the Boy Scouts or something.
You're thinking of the Tootsie Roll owl.
Oh, the Tootsie Roll owl, and there's another owl too. I think like for Scouts. About to look into this. Well,
Oh,
you're
jeez.
still gone.
Yeah, I'm still gone apparently. All right, hey, I'm back. All right, so yeah,
Welcome back.
Duolingo is a software that actually lets you learn actual languages, and they kind of take two different similar approaches, where like they a grammar or syntax skill that you have to learn, and then they reinforce it with exercises, and then every so often you have to redo these exercises to make sure you actually remember some of the stuff
that you picked up. Yeah, I think it's very interesting. It's
Yeah.
a lot of the mnemonic techniques like anchoring, refreshing things to make sure that it goes from your short-term memory to long-term memory. If you're in school, they recommend that you review your lecture notes right after your lecture, even though it's kind of fresh, to kind of just kind of move it from your short-term memory into your more long-term memory, which you have more of. Yeah.
I think you cut off.
Did I? All right. Well, I'm
For a
just
bit.
saying that you have more short-term memory, you have more long-term memory than you have short-term memory, so it makes sense.
Great. Okay, so considering our audio issues, let's cut it off for the day and let's end it right here.
Oh, I was looking forward to start instituting something like over at the end of every single sentence. Over.
Yeah. Well, it's done.
It's over.
So, it's weird. Jeez, what a day.
What a day.
Yeah.